Hey everyone, Steve Ferguson here, your modern mortgage loan advisor. I tell you what, before I start, I'm going to turn down my cell phone because it always interrupts me no matter what in these kinds of videos. So I appreciate your patience. You know what? Everybody is asking me the same question right now. What does everybody think the Fed's going to do when they meet here in the next couple of weeks? My personal opinion, they're going to drop rates, probably over a quarter of a point. Let me tell you why. So number one, inflation came in lower than everybody anticipated. That's great news. That's an incentive to lower rates because the biggest concern was inflation numbers would go up with all the tariffs and everything that are rolling out, and the opposite has been true. The second thing that's a motivational factor for interest rates being pushed down by the Fed is the unemployment numbers are increasing, and so that means that our economy is a little weaker than everybody projected. That's good news for interest rates. That should drive them down and start the first of what I hope is many times or many instances where the Fed will continue to lower interest rates. There's talk that the Fed could drop the rates over the next 4 meetings, which would be really interesting for the market. This is kind of what I've been predicting and what other people have been predicting earlier this year, that we thought the fourth quarter of this year is when we would start to see the rates start shifting down. And I think we're definitely on that trajectory. So if you're thinking about it from a perspective of buying or selling or whatever it may be, think about it in the form of like a pendulum swinging back and forth, back and forth. Right now, that pendulum has swung all the way over to a pure buyer's market. That means if you're a buyer, you're getting your best deal on the market right now, the lowest home prices, the most incentives, there's a lot of inventory, etc. As soon as those rates start to shift, you'll see that pendulum move. It'll start moving back the other direction. And it will gradually shift back to a seller's market because you have more people buying because of lower cost of funds, which gives the seller more people asking for their products so they can increase the price of their product because people are willing to pay it. And now there's competition on that product. So for example, if I'm a seller and only have one option to sell my house, I'm going to work pretty hard to make sure that I get that thing sold. But if I've got 3 people interested in the same house, now we start to negotiate, I start to get better numbers, etc., and that drives more of a seller's market. So right now, in my personal opinion, I think we're in the perfect spot for buyers. You should be buying, getting houses under contract, writing offers, negotiating, getting everything where you want it to be, because in a short amount of time, I think that's going to not be as attractive as it is right now. Now, will there be some foreclosures and stuff like that in the market? I'm sure that there will be, and depending on where you're located is going to really determine how many foreclosures are on your market. Where I'm located in Central Texas, there will be some, but I don't think we'll see a ton. There's too many investors and everything buying them up. But I think overall, we're going to see a shift back to a seller's market sometime in 2026. So be diligent, look for great deals. There's a lot of great deals to be had right now. Get off of that fence. Let's jump into the market and get you guys where you want to go. All right. Any questions? Let me know. Drop me some comments. Let me know if you agree with me or not. And back up your comments. I want to hear what you've got to say. Well, it's great talking to you guys. I hope you have a great day, and thanks for tuning in.